Hello and welcome to the Capital Markets program on Channels Television. I'm Edidiong Iwang. The chairman of the House Committee on Capital Markets and the Director General of SEC were at the Lagos Commodities and Futures Exchange to see the challenges and progress made so far at the exchange. Well, the Managing Director of Lagos Commodities and Futures Exchange, Akin Akeredolu Ale, says if the commodities market is harnessed properly, Nigeria can achieve double-digit growth in gross domestic product. The chairman of the House Committee and the Director General of SEC also made commitments to support the growth and development of the commodities ecosystem in Nigeria. Let's take a listen.
Aspects of solid minerals, particularly gold. And we're very happy that the federal government is focusing on gold. The CBN is focusing on gold. And everybody knows that sooner or later, if we work hard on it, gold will become the reserve currency for Nigeria, whereby we'll have our own gold within Nigeria. And we'll store it as gold in Nigeria, and it will have value when we find in Nigeria. Nigeria is a resourceful country, and we have a very young, vibrant population. And particularly, we spoke with the Minister for Solid Minerals. In excess, on an annual basis, of $5 billion are things that we can harvest. And that is a very, very small amount compared to the distribution of solid minerals that we have in Nigeria and crude oil. Now, when we mention crude oil, one of the things that we're going to be asking for is that we should be able to trade our crude oil within this country. It's very, very important, because that crude oil that's been traded outside the country is building up another ecosystem entirely. The float that is involved in that particular trade builds up another ecosystem in Switzerland and other places. I hope that the Commission, in conjunction with the legislators, will be able to find a way whereby, even if it's 10% of whatever we're trading on, producing about 1.8 million barrels per day, 180,000 is traded and Nigerians can trade on it there. Now, in the next 5 years, we look at a situation whereby if the commodities ecosystem is harnessed properly, we can use it to move our GDP from single digits to a double digit. We've had, we're moving into a recession. We were at about $525 billion about 3-4 years ago. We're now at $250 billion, probably $350 next year. This is the lowest straw that we can be. If we harness our resources, mineral resources together, agriculture together, there's no reason why Nigeria should be under $1 trillion economy. And it is not rocket science. It is just for us to put structure into place and start harvesting. And when I spoke to a bank MD, he said that whether you people set up the commodities ecosystem or not, sooner or later, foreigners will come in and set it up. And whether you like it or not, indirectly, without structure, we are having a continuous influx of foreigners into Nigeria, mining in Nigeria illegally, exporting illegally, and making vast amount of money from it. So it's better for us to put together our structure immediately. Our projection from our own side, if you look at the value of mineral resources that we have on the ground, is that there's nothing stopping Nigeria from hitting about $700 billion GDP in the next 24 to 36 months from the commodities ecosystem on its own. Nigerians are able, they are ready. And I know that the commodities is there for us to trade on.
There are lots of things that are still, to be done. I've seen the very long list of requests, from the MD and also from the chairman's, address, what we need to do, for the commodities market. We are going to work with you to develop all the rules that we need to make sure that we are able to really realize the potentials of this great country in the area of commodities trading. It's not only agricultural commodities that we are really into, of oil and gas, of solid minerals, of currencies, and I believe you can also do even more. But let's really get the foundations right. Let me make this commitment to you that we will continue to engage with you closely. We already have our periodic exchanges. We already have our quarterly meetings, with you. But I will also want to say that our doors are really open. If you at any time have any issue, reach out to us. Let's put the issue on the table, discuss it, and see really what we can do to advance this area of the market. I believe if we are able to do what we are doing now, very well, this market will really rival many of the other markets, in the capital market. And I think it will be to the glory of this country and its citizens that we can really have a more vibrant economy in the years to come.
The responsibility of Parliament to ensure that an enabling environment is created for the commodity exchange, not only commodity exchange, including other capital exchanges to operate, because we owe a duty to ensure that the market grow. And the only way to save the economy is through the capital market activities.
The Chief Executive Officer of the Nigerian Stock Exchange, Oscar Oyema, says the exchange is cautiously optimistic in its outlook for 2021. Mr. Oyema, who was speaking to a delegation from the House of Representatives Committee on Capital Markets and the Securities and Exchange Commission, says stronger collaboration between fiscal and monetary authorities is critical to enable growth-stimulating policies for the capital market.
Optimistic, and this optimism is supported by IMF numbers that forecast a 5.2% growth for the globe in 2021. Obviously, it's not going to be evenly distributed, given that the pandemic has had varying effects on varying countries. Nigeria, because we actually had a twin challenge, COVID and oil price shocks. So because we're reliant on oil prices, especially for our FX reserves, the dynamics of crude oil prices and production will continue to influence the capital markets and the larger economy. Stronger collaboration between fiscal and monetary authorities is therefore critical to helping us come up with growth-stimulating policies that would allow us to emerge out of recession and begin to grow the economy again. We believe that in doing that, that recovery is going to be led by investments in infrastructure, investments in people, investments in policies that will create such laws as the CAMA 2020 that we're all celebrating right now. And I must say, because we're a market, next slide, that we always look at both sides of the equation. So there are downside risks. So it's not a slam dunk that we're going to have growth in 2021. There are some risks. And obviously, the biggest risk is, having a second wave, a third wave, as some countries are doing right now, of COVID. Because if that happens, if we don't manage it well, we'll go right back into recession. The next thing to worry about is oil prices. We're recovering, but it's a very odious task to try to predict where oil prices will be. So we just hope that those prices continue to go up. Those things will have significant impact on us. For example, the whole of this year, we've not had one IPO. So it has really affected companies. A lot of companies, especially SMEs, have declared losses or significantly reduced revenues, and the exchange is no exception. We're tracking, very double-digit negative to budget. We also run some risks. Given the FX challenges, MSCI indices and other index providers are really looking at reclassifying Nigeria to a standalone status. That will not be good for the country, because that means additional pressures will come on to FX for money to leave the country and follow those indices. So we continue to engage with MSCI and other index providers, and we hope that the pressure on FX will ease a little bit so that we continue to stay in those indices. The last challenge is the earnings of listed companies. For some of the sectors, we've had very good reports the banking sector, the telecom sector, agriculture. Those are all areas where you've seen, very strong results. But that has not been true for all the sectors, especially hospitality, transportation, and those types of sectors that have been deeply impacted by COVID-19. Next slide. So for you, and what is relevant to you, we really want to make a call to action that part of that recovery should be driven by legislative support and action. It is critical that the public and private sectors work together to foster a stronger financial system. Investors should also be kept in cognizance with the federal government's legislative and executive actions.
On Friday, the chief economist and head of research at Greenwich Merchants Bank, Ayodeji Ebo, joined us on our Business Morning Show to discuss how the central bank's introduction of special bills is playing out in the market. He also speaks on the equities market and explains the declines we have seen in that space lately. Let's take a listen.
The CBN also issued a circular around the special bill, which created some form of what I would say suspense in the market. So for the fixed income market, we know there's a negative relationship between the fixed income market and the equities market. And so for most of the players, the market players were expecting to at least be able to affirm what levels the CBN will issue the special bills. As a result of that, we saw some investors trying to take profit ahead or reduce their exposure. But when we saw as yesterday, the special bill was issued. I think is estimated at over 4 trillion at 0.5%. And we also saw the PMA result on Wednesday, and surprisingly, we saw the one-year bill close above 3%. So that also threw some panic into the fixed income market. And as a result, there was expectation that yields would improve. And if yields begin to improve within the fixed income market, it will begin to compete with the anticipated dividend yield within the equities market. So we saw that shock yesterday, especially the banking sector lost about 4%. But as I'm trading this morning, we've seen some of those stocks are already firming up. Investors are new investors are trying to take position and trying to buy some of these stocks at better prices. So we feel that we don't expect this downward trend to persist. Some of the stocks now present better opportunities ahead. Full year dividend that will be declared in the first quarter of 2021.
Now, until this week, we got a sense the CBN was looking to keep rates at low levels, although with twin issuance of the PMA for treasury bills and the newly issued special bills at 0.50% that you talked about, are we likely to see a reversal in the restrictions of the OMO participants?
Well, we don't expect for now for CBN to reverse that policy around the participation of retail investors and especially domestic investors in the OMO market. The focus now with the issuance of the special bills yesterday, the 81-day bill at the 5%, that created some form of clarity in the market. Though there's still a lot of questions to be answered around how those bills will also be traded. But we feel that market has begun to has begun to settle, and we believe that rates has improved. Yesterday, rates improved an average of about 100 basis points across the FGM bonds market, and we'll begin to see some demand. We saw that towards the end of the market yesterday, we're also seeing demand. So based on our view, we feel that interest rate will still inch up slightly, but because of the expected liquidity in the system, that's the downside risk that will keep them at check.
Capital market capital market continues when we return from this break. Please stay with us. Welcome back and thanks for staying with us on the program. Earlier this week, the House of Representatives asked the National Insurance Commission to suspend its planned mandatory deadline for the recapitalization deadline for insurance companies set for December the 31st. The submission was made through a motion sponsored by Benjamin Kalu, representing APC Abia, and 15 other members of the House. NICOM had earlier directed insurance and reinsurance companies to complete the first phase of 50 and 60% minimum paid-up share capital for a minimum of 6 months from January 2021 to reduce the impact of COVID-19 on the insurance subsector. The Commissioner for Insurance and the CEO of the National Insurance Commission, Sunday Thomas, responded to the calls by the House of Reps on our Business Morning show during the week. Let's take a listen.
Gauge the market. And for us, it's not as much as whether one wants to back down or not. I think what is important is the interest of the industry. What do we do to deepen our market? That's what the whole exercise is all about. So, but for now, with respect to that, we have to separate the issue of the deadline, the issue of the aftermath of NSAS. Let's separate them and put them in the right perspective. I believe that the entire recapitalization being mixed up with the issue of NSAS may not necessarily be an issue for consideration. But as far as your question is concerned, I would rather, now that there has been an intervention by an arm of government, I would rather wait and see until the processes and procedure for conveying the resolution of the Assembly is passed and to the National Insurance Commission.
Thank you. Now, the insurance sector, of course, seems to have been in a topsy-turvy state for years. And you had said that 2020 is the year to turn around the insurance sector. Perhaps that's the reason we're coming up with this recapitalization and, of course, all the policies and programs of NICOM. We have few weeks, of course, to the end of 2020. Can you give us an overview of the current state of the industry?
Yeah, we started the year on a very good note, believing that we have a great year ahead of us. Unfortunately, the unexpected happened. You will realize that most part of this country, there has been a lot of inactivity, and those initiatives that are lined up for realizing some of the goals could not be achieved. But notwithstanding, I must say that this year may not be totally as bad as it looks. This year, 2020, of course, if you look at the numbers, in spite of what we went through, that the variance is not as massive as what it was. Of course, we haven't had the total figure, but from the interim numbers that we are getting, it may not be as bad. But I would say clearly, deepening the market was our goal. Of course, still our goal. We set out and we said we are changing. It's not just about regulation. It's also about developing the market. But some of the mechanism for developing the market was the reaching out to the states. Not much of this, we couldn't do much of this because of the restrictions in movement and the rest of that. But notwithstanding, in-house, we were developing some things that we believe will deepen the market. Just about a week ago or so, we were able to register 5 additional companies, 4 insurance companies, and 1 reinsurance company. The last reinsurance company that was registered in Nigeria or licensed in Nigeria was about 35 years ago. So we believe that we need additional operator in that area because the level of retention is on the downward trend. And we need to shore up this by licensing a local company. Of course, again, we see what is happening in the pensions arena. Right now, we're talking about over 11 trillion. The insurance sector is not playing. I would say it's not playing at all in this sector. And we ought to be leading in that. So, but I mean, out of the 4 companies, insurance companies that were registered, 3 of them are life companies that will be playing in the annuity market. Of course, we expect that the activity will also assist in deepening the market. Like you rightly pointed out, the issue of recapitalization was expected to strengthen the companies so that big ticket risk can be taken and retained largely within the market. But of course, we are still going on. Like I said, we will see the content of the resolution, then we see how to progress from there. Other than that, the issue of human capital development, we are pursuing this. Even this year, we are making an arrangement. We know the role of actuaries in risk assessment. This is one profession that is lacking in this part of the world. And we are determined to do that. And we are not just saying it. We are starting the first set of students that will be writing an exam that may assist, or that will assist easy qualification. It's going to start by March next year, but the process is starting now. And it's being bankrolled, it's being financed or funded by the National Insurance Commission. Apart from that, we also have assisted a couple of institutions to strengthen their insurance department. So that let us do what we call backward integration. Let's develop the human capital that will be necessary to assist to achieve the objective of the industry. These are some of the areas. In addition, we are engaging some institutions like the Shippers Council. We are also looking at the Nigerian Content and Monitoring Board. Some of the leakages that we have noticed, we are trying to see how best we can block them. Most importantly, awareness creation. We've started this. Of course, we have the restrictions also reduce the impact that we will have made in this area. But we will continue. We just roll our programs. We roll it over into the coming year and see how far we can go.
Well, that's all on the program tonight. Thank you for watching. I'm Edidiong Iwang. Do stay safe.